Anil Manghnani is now joining us on a phone line. Anil, good afternoon. Always a pleasure talking to you. First, if you could tell us about this consolidation phase. You think it's a positive sort of a phase because it sets the base for markets to go much higher because we are not falling from here on?
I'm not a believer that consolidation happens after a 10% move as such. I just felt that, look, although 77 to 7,800 was the key resistance zone for this current rally, I mentioned 75.80 as the 20-week exponential moving average last week. So I think for today, I will just assume that the market is facing resistance at the 20-week moving average of 7580. When it takes it down, then we can look towards the 77, 7800, which is the key hurdle for this rally that started at 68.25.
Right. Any view on Crompton and Greaves? It gets X demerger tomorrow?
I guess the people who are making last-minute adjustments, but purely technically, obviously, the stock was way beaten down, so it still looks like a relief rally. 158 or so is the first level I have, and I think if it has to stretch, but again, this will be post the demerger 172. But it still looks like just a technical bounce rather than something new. It probably has one more move on the downside.
Right. Anil, I just wanted to understand, tomorrow it will get X demerger, that's the consumer business. Post that, the historic data would be irrelevant?
No, I don't think so. I think obviously you'll have to add all the components together. And that, I'm assuming the chart would still work that way, where you add all the components and see where the price eventually is suggesting the net total. So I don't think it will become redundant. But yes, I guess it gets a little tricky once you have a demerger, how to trade the old stock.
Right. How is the chart of Tata Motors looking? We've spoken about it recently, but I believe from there also it's moved up about 8-9%.
I had a buy in the sub 300s, but I had two targets. One was 348 and one was 370, 375. So we've come to the second target. So although the setup may still look okay, I'm I'd say a little tempted to take some profits here because we are right at the 200-day average, and some of the major 200-week averages also come at about 370, 375. So tempted to take some profit for sure at this point.
Right. What would you essentially make of the euro? We had spoken on Thursday. That's when we had the big event of ECB. You think after that, now it's clear that it's going up?
Second time in a row, once in December and once in March now. It suggests that people tend to go into these events with a lot of negativity, and obviously once the news is out of the system, it becomes more sort of a short covering situation, and I think it's happened twice now. So after the first announcement, the euro has, I wouldn't say tanked because it only fell 1.5% this time around. But post that, it looks like then there's no reason to be short anymore because the news is out of the system. The QE has been done and dusted. So although I think the bigger picture still remains weak, in the shorter run, if it had to stretch in this rally, maybe I got a 20-month moving average at about 114.5. So I think that will be the first level to watch out. And suppose you're looking a few quarters down the road, maybe 117, 118, but I doubt it will be such a big rally. I think somewhere in this 114 to 117, it should top out and again start to move lower.
Right, Anil. Right, Anil. Thank you so much for taking out time for us. Always a pleasure talking to you.